Am I audible, everyone? Am I audible? Everyone, please give a reply. So let the students join. We are going to do a full length revision of all your concepts. Mainly the heads of income we are going to complete. So stay live. We will be having a very good revision of entire concepts inside this. Mainly the chapters like capital gains, PGBP, all those things we are going to cover. So get the best use of this live. Okay. So there is no concept of listening after the live because you are having the exams after a day. So please be serious, maintain a level of seriousness when you are listening. We will also complete some questions and answers as well, okay, such that you will build up that confidence before you go to the exam. PGBP, capital gains, other sources, house property, everything we are going to cover. So tomorrow's session, we are going to cover 3 areas: clubbing, set off, deductions. 1.5 to 2 hours, I will complete all along with the questions, okay. So I hope everyone have written your law examination well. So whatever discussed in the class have come in the examination. I saw the question paper as well, but I should not discuss anything about the law paper now. So that's stopping me from telling anything about the paper. So now it is our imperative need to go on with DT revision. I hope every one of you are targeting for success in the coming exam. So please be serious. Take a book, pen and a pen, and study material along with you. Study material, question bank, whatever the sources that are available. Once the concept is completed, we are also going to do questions and answers inside that. Please share with your friends as well. Just 2 minutes. We are going to start with. Focus properly. I pasted all the links as well. So the live links were pasted on the Telegram channel, as well as it was also posted on our WhatsApp groups. So you can join now. First of all, everyone, please give me a reply. Are you all ready? Shall we start? Yes? Okay. So let's get started with. So first of all, the first point that I wanted to convey to everyone, please stay live till we complete, because the entire hard works are only for you. Because I can also ask you to listen to the videos that were already uploaded on the relevant contents. But in a live, student will be attentive, you will listen. And if you take 2 hours time to complete, here you can complete that in 15-20 minutes. So that's the whole intention of asking you to stay live and complete along with me, such that your burden for tomorrow will be reduced like anything. Because if you complete properly all the heads, etc. now, so there will be no burden that will be carried forward to the next day. Okay. So with that motive, please, the greatest thing that you can do is, people might not be aware, they might be coming from examination, please share the links with them. That's the greatest favor that you can do to your friends at this moment. Okay, let us begin. So I hope everyone will work like a champion now, behave in the same way, keep your attitude high. Okay, forget about all the papers, whatever you have written, good, bad, anything. So please leave all those things. Okay, everything, if you do proper hard work, he is there to take care. Okay, you will pass, you will definitely become successful. He is there to take care if you would have put enough hard work into the study. So let us now start with this. So let's start with the concept. Point number one. Yeah, point number one. First thing, theory question can come on a basis of charge. Okay, basis of charge, a theory question can be tested. See, first point number one, the whole motive of this particular income tax act is, there are two important years: assessment year, previous year. Previous year means the year in which you are earning income. Assessment year is the year in which you are paying tax on that income. Okay, done. I am earning income, paying tax on income. Which income? Total income. PGBP ki one previous year, one assessment year. Salaries ki one previous year, one assessment year. Adilla. So there is only one thing. All incomes put together, we call it as a total income. Total income of a previous year will be assessed to tax in the next year, which we call as an assessment year. Okay. So next one. What is a previous year? Previous year, for the purposes of this act, for the purposes of income tax, previous year means financial year immediately preceding the assessment year. So if there is an assessment year, the immediate preceding year we call as a previous year, corresponding to that assessment year. Next one, what is assessment year? Assessment year will be a period of 12 months, commencing on 1st of April every year. Commencing on what date? 1st of April every year. So assessment year is always a 12 months period. Assessment year is always a 12 months period, commencing on 1st of April every year. Okay, so two things we learned now. Actually, three things we learned now. Number one, income tax is a tax on total income, not on income. It is tax on total income. What is total income? Section number 14 will tell about what is total income. Okay, section number 14 of Income Tax Act say what do you mean by total income. We will discuss that much later once we come into that. So in a sequence we are going. So number one, previous year completed, assessment year completed. So year preceding assessment year, previous year of 12 months for which you are assessed to tax, assessment year. Next one. There is one question that came in examination from this. This is actual exam question that came for 2 marks. Okay, what I promised you at the beginning of live, I will keep that promise. Whenever one concept is completed, any important numerical illustration is there on that, we are also going to complete. This is a 2 marks question, came in 2 attempts before. Where it came? MCQ, it was tested. What is tested? Read the question. There are 3 accounting years they have given: 23, 24, 25. Income as per books they have given. Quarterly breakup of income, Jan to March, April to December. Amounts are given. Calculate the income accessible to tax for previous year 23, 24, 24, 25. 2 answers will come now. Those 2 answers, different 2 answers they gave as A, B, C, D. Understood the point? Everybody please reply. Did you all understand the question clearly? What I asked now? I'm talking to you, everyone. This is a 2 marks MCQ question. Okay. So let's have a look. What is the significance of this 2 marks MCQ question? So first thing, accounting year 23, 24, 25 means calendar year 23, 24, 25. Income as per the books. Okay. Quarterly breakup of income. So first thing you should understand, books of accounts la 60,000, 70,000, 90,000 is the income. These are the calendar years, Jan to December years. But we want Jan to December, or it should start on 1st of April. It should start on 1st of April. Therefore, they have given a quarterly breakup. Jan to March 18,000, April to December 42,000. From this, what you need to understand, we don't want 23, 24, 25. We want 23, 24 financial, 24, 25 financial. So now listen carefully. 23 year, if you observe, April to December, this is the income. Okay. Jan to March, this is the income. 23-24 financial year, 23-24 financial year starts on 1st April 23. So 42,000 plus ends on 31st March 24. 24 Jan to March is 26,000. Totally how much? 58,000. So for the previous year 23-24, my total income as not as per books, my total income as per income tax is 58,000. Let's check the answer. Sorry, 68. I'm very sorry. 68. 42 plus 26 is 68. See, 68,000. That's it. Like this, they ask the question. Means what they have given in the exam, 68,000 slash 65,000, 72,000 slash 68,000. Like that, 4 different questions they have tested. This is how you need to answer that particular question. So the main point that you need to understand is, if they give you calendar year data in the question, okay, they will definitely give you the breakup for the financials. Accordingly, you need to do the answers and give the answers in the MCQ properly. First of all, one answer. I want proper feedback from all the students. Did you understand what I said now? Everyone, did you understand the 68,000 computation or not? Like that, we need to do also for 24-25. 24-25, 44,000 plus 21,000, 65,000. That is the 65,000. Okay. So from this, what is the moral of the story that we need to understand? Assessee may follow any year, may or may not be a financial year as accounting year, and maintain books accordingly. But assessment for the purpose of Income Tax Act shall be only a financial year which starts on 1st of April, ends on 31st of March of next year. Everybody understood the concept clearly up to here? Hopefully, yes. Next one. Different previous years or different sources. Proviso to section 3, it was written. Different previous years for different sources. Sir, what is different previous years for different sources? See here. In respect of existing business, all these are once asked in exam. Please show importance. Just because of the reason that I am taking some basics at the start, that does not mean this did not come in exam. If something has no relevance in exam, I don't touch now. This is exam oriented marathon, wherein I will cover only from the exam's point of view. No bare act, nothing. So please concentrate properly. So different previous years for different sources. Sir, what is this different previous year for different sources? See, in respect of existing business or profession or existing source of income, existing salary, house property, PGBP, capital gain, other sources, anything existing. No different sources can have, no different sources cannot have different previous years. Sir, what does it mean? For example, I am having business over last 5 years. I am having salary over last 3 years. Okay, for business, for salary, for all together, there is only one previous year, one assessment year. But in respect of newly set up business or profession or new source of income coming into existence, yes, new source or business or profession shall start from the date of its coming into existence and ends with the financial year. I will give 1 minute time. Read this properly. On this, one MCQ came in exam already. Okay, read that content properly. Have you read? Give me a reply. Have you read? Yeah. Okay. See here. Sir, what does this mean? How question came in exam? Sir, you said now 1 mark MCQ came. How that MCQ was tested? See. See here once. Summary. With respect to new source, begin from the date of its existence. Okay. Ending 31st March of next year. The duration will be less than 12 months. Sir, what does it mean? I started my business this year. I started my business this year on 23rd of August 2025. Example, 23rd August 2025, I started my business. Okay, new venture of business I started. When I started? 23/8/2025 I started. Okay, my previous year will start from 23/8, ends on 31st March. Assessment year will be the next immediate year. From this, what is the moral of the story? I started my business on 23/8 means my previous year won't start from 1st of April. Okay, normally previous year starts on 1st of April, ends on 31st March. But if a new source of income comes into existence in the middle, then the previous year will start from the day on which you are commencing that new business. Okay, new business or any new source coming into operation. For example, I am a salaried employee. Okay, over last 10 years, I am in salary. I am in employment. So now I am having two previous years. Okay, previous year, which starts on 1st April, ends with the 31st March with respect to salary income. With respect to salary income. Previous year, which starts on 23rd August 2025, ending with 31st March 2026, in respect of the business income. Did you all understand the meaning of these two sources or not? So, if any new source of income is coming into existence during the year, then your previous year will start on the day on which that new source is coming into existence. Everyone understood the point clearly? Clear? I want reply. Silence can never become your reply. Okay, one person already asked another question. One person asked a question there. You can see, what if business started on 1/3/26? What will be the previous year? What will be the previous year? Then the previous year will start on 1/3/26, ends on 31/3/26. Okay, so see this illustration. 1 minute. This is the question they tested in examination. Similar question came in exam. Are you seeing the question, everyone? So, assessee is Mr. A. Assessee is Mr. A. That assessee, Mr. A, joined employment on 23rd August. No other source of income. Compute the previous year for assessment year 25/26, 26/27. 25/26 assessment year will start on 23rd August 24 and ends on 31st March. For the next year, 1st April to 31st March. Next, another question. This is also a 2 marks MCQ question. Assessee is Mr. X, source of income. He is having a property income from 2005, business income which started on 10th March 2024. One student asked the question, similar type. Property income 42,000 per annum. Business income 69,000 from 10th March 24 to 31st March 25. Rupees 10,000 is between 10th March to 31st March. Rupees 10,000 is between 10th March to 31st March. From this, what you have to understand? See here. Compute the taxable income for assessment year 23/24, 24/25, 25/26. See, for the year 23/24, only there is one source which is called as property source, 42,000. 24/25, I am having 42,000. I am having 42,000. And if you observe here, listen carefully. If you observe, Sorry. If you observe, 69,000 from 10th March 24 till 31st March 25. In this, 10,000 is between 10th March 24 to 31st March 24. Means in the 21 days, 10,000 is there. So totally 52,000 in that year. Next, 25, 26, 42,000 is there. 69,000, 10,000 already taken. 59,000, 1,01,000 is my taxable income. These are the three answers they have given in the exam. Means what? Bit A, 42,000. Okay, 42,000, 52,000, 1,01,000. B, 42,000, 62,000, 1,02,000. Like that, four answers they will give. You need to pick the right one. Did you all understand how case scenario questions are coming in exam? Everybody. Everyone. Understood? Next one. So next, definition of a person. You already know this. Person includes individual, HUF, company, firm, AOP, BOI, artificial judicial person, local authority. Next. Important things only I am covering. Unnecessary things which are required for regular classes, I am not going to touch any of them. Whatever I am going to discuss now, every point has a potential chance of coming in exam directly in the tomorrow's class. Okay, I mean the tomorrow's exam. There is every potential that these are all potential questions which can come in exam. Okay, next. Very, 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 very important. Students will leave, they will ask accelerated assessments. 172, 174, 174A, 176. Okay, there are 4 sections. Actually, there are 5. That also I will cover there. 172, 174, 174A, 175 is also there, 176. Let us see. What is this accelerated assessment? Mark this important. One from this can come in exam. I'm repeating one more time. If you do not listen to my words, that's not my mistake. I'm repeating one more time. We are now going into accelerated assessments. One from this has a potential chance of coming in exam. Most important for the tomorrow's examination. Okay, let's begin. What is this accelerated assessment? Let me first explain you. Normally, income of the previous year will be assessed to tax in the very next year. Means the year in which you are earning income is not the year in which you will pay the tax. If you earn income this year, you will pay tax next year. I repeat again. If you earn income this year, you will pay tax next year. You will not earn income today and you will not pay tax today. You will earn income today but pay tax in the next year. That means government will wait for some time. However, certain times government has no clue as to how this person has to be taxed. At that time, government don't want to take any kind of risk. Such a situation time, government will go with an accelerated assessment. Means what? Previous year income will be assessed to tax in the previous year itself. I repeat, previous year income will be assessed to tax in the previous year itself. Such a situation we call as an accelerated assessment. Okay, see, in this 172 is a potential question that can come in the exam to make your life miserable. So please listen carefully. To whom this is applicable? There is a non-resident. This is a revision, super revision, super fast revision, ultra fast revision. Don't expect me to repeat. First time you should listen. Conditions attached to section 172. There is a non-resident. That non-resident is carrying on a shipping business. He is owning or having a charter of a ship. Okay. Ship carrying passengers, livestock, mail, goods, shipped at a port in India. Shipped at a port in India. Is important condition, blue content. Shipped at a port in India. Okay. It should be shipped within India. Repetition one more time. Most important, 172 out of all. What is 172 saying? Let's have a look. There is a non-resident. That non-resident is carrying on a shipping business. That non-resident is not just having a shipping business through that. He is owning or chartering a ship. Okay. That ship is carrying either passengers, livestock, goods or mail. But these should be shipped where? Shipped at a port in India. What if the conditions are satisfied? If all the above conditions are satisfied, 7.5% of the freight and other charges paid or payable to non-resident shall be deemed to be the income chargeable to tax. Sir, what is this? This is a classic, clear example of presumptive taxation for the non-residents here. See, PGBP chapter, we will read presumptive taxation. What is presumptive taxation? I really don't know what is your income. I really don't know what are your profits. Okay. You show your total income. This is the total income. Okay. In that 8%, if it is involving cash receipts, 6%, if it is involving only bank receipts, no cash receipts, maximum 5% allowed, then 6% of your total income is your profit. Like that, I will presume. Okay, I will presume. Really what happened, I don't know. Okay, I don't know exactly what is happening. You just assume that this is the maximum profit that you made. Likewise, what they're saying here, are you a non-resident? Yes, sir. Are you doing shipping business? Yes, sir. Are you owning a ship? Yes, sir. Are you carrying passengers, livestock, goods, mail, any of these in India? Yes, sir. That's it. Come here. 172 law, you are falling. So what? So what means when passengers comes inside, you will collect a freight. When goods kept inside, you will collect a freight. When livestock kept inside, you will collect a freight. When mail is kept inside, you will collect a freight. Correct? Until you are earning income from a port located in India? Yes, sir. Therefore, on the total freight and other charges, whatever you collected, 7.5% is presumed to be your income. Means what? 92.5% are deemed as your expenses. 7.5% is deemed as your income. Really, your expenses for carrying all these things may be 95%, but 7.5% you have to pay tax. Maybe it is only 80%. Even that you should pay tax only on 7.5%. That is the concept behind that presumption of 7.5% rate of tax. Everybody in the class understood the concept clearly? Reply, everyone. Don't sit like a clock. Work like a clock. Everyone, have you all understood? Okay. Now listen carefully. Now see here. Now what will happen? This section has an overriding effect over all other provisions of this act. Therefore, charging section do not apply. Section 4 do not apply. Sir, what is section 4, sir? I did not read. That's not for exams. It's exam-oriented marathon. Therefore, I did not touch section 4. Section 4 says that basically, normally we read section 4. Deeply we didn't go. Section 4 says that income of previous year will be chargeable to tax in the assessment year. For that, this is an exception. Okay. Okay, next. Sir, non-resident is doing shipping business. Ante PGBP. Correct? No. That's why. No deductions under the head PGBP are allowed. No set of carry forward. No deductions under section 80. Means what? 7.5% of your total freight and other receipts will be treated as your income. On that 7.5%, shut your mouth, pay the tax and leave India. That's it. Now the question arises, sir, goods must be shipped at a port in India. Yes. Sir, if the goods are shipped in Singapore, then this section will not get attracted. Then what will happen? 44B will get attracted, but that's not there in your syllabus. Therefore, I'm not going into that. Next, payment is not relevant. Payment may be made, may not be made. That's why paid or payable. They will confuse you in the examination by putting this a trap. Money is not received. It will be received. Whether received or not received, I don't know. Total livestock, passengers, goods, mail ki, how much invoice is raised? Amount received or not received is irrelevant. Invoice is raised. Yes, sir. How much value? This much value. On that 7.5, pay the tax. Okay. On that 7.5% is the income. On that we will pay tax. How much rate? We will see. See here. Hey, I'm not joking. Listen carefully. These all points are relevant for your question that comes in exam for 8 marks. Place of payment is not relevant. Sir, what do you mean by this? Exam question like came. See, goods are shipped in India. Payment is made in Turkey. No problem. Where payment received is not important. The source of income emanated from India. The arising of source of income is in India. That's it. Taxability will start. Any demurrage charges, handling charges or any other charges are included into the freight charges. That's why freight and other charges, and freight, everything, demurrage, handling, everything I will include into 7.5 is your income, into 40% tax rate. Generally, if you listen carefully, important discussion is going to start. Okay. See here. Important discussion is going to start now. Please have a look. Point is, whenever a non-resident shipping company is starting its onboard journey from India by taking passengers, master of the ship will be there. A master of the ship has to give the invoice value. How much? 1 crore. 1 crore into 7.5. 7.5 lakh. 7.5 lakh into rate of tax. Let us say 40%. Some 2,92,000 it will come totally. Example, okay. A 2,92,000 tax you have to pay and then leave the ship and go. Or else you will take the passengers, you will leave India. You are a shipping company, non-resident shipping company. Okay, you are not Indian company, you are a non-resident carrying on shipping business. Just a ship came to India, company is not there in India. So you are taking the passengers, you are collecting freight. You are telling I will pay tax after 1 year. India la persons 1 year after they are not paying. You are not a person in India. That too, you are a company outside India. How can I believe you? Pay tax on that now itself and then leave India. That's why this is accelerated assessment. Means I will not wait till the end of assessment year. You have to pay and then leave India. That's why, see, generally master of the ship should declare by filing a return to AO before departure of the ship as to the amount paid to NR and pay tax accordingly. However, if AO is satisfied that master cannot submit the return as aforesaid, he may give 30 days time to do so if the master has provided sufficient alternative and any other person to file. Next, the owner or charterer of the ship may claim to apply other provision. This is not required now at this point of time. So simply to tell, master of the ship should pay tax to assessing officer, give a declaration of amount and pay tax and then leave India. This is what they wanted to tell. Next, 44B, anyway not required for you now. Let us first understand the concept clearly. What if the conditions are satisfied? If income shall be calculated at the rate of 7.5% of amount paid or payable in India for the goods, etc., shipped in a port outside India. Amount paid or payable in India for the goods, etc., shipped in a port within India. Sir, what is this? This is according to section 44B. I'm keeping this section on hold. Okay. I don't want it to confuse you now. I will just go into one illustration that came in examination with regard to section number 172. Okay. 44B I will discuss now. Before that, keep in mind, everyone give me one declaration. You should give me declaration. You are non-resident, I am assessing officer now. Please give a declaration. Did you all understand what I discussed till now in 172? Till now in 172, what we discussed, did you all understand? Yeah. Now listen. Now listen. 44B also I covered in regular class, but now I will be covering only 172. Assessee, Mr. X, 62 years, non-resident, engaged in a shipping business. Details of freight collection during the previous year 24-25. 6824 shipping cost including handling and demurrage 40 lakh. Shipping cost with no other costs 25 lakh. Shipping made on 68. Shipped from Cochin port within India. Demurrage charges, handling charges. Next, shipping made on 10-1, shipped from Bombay port. Payment made in New York. Freight includes all the costs. Now you will tell, I will listen. First, he is a resident or non-resident? Non-resident. Carrying on which business? Shipping business. Okay. He is owning a ship? Yes. Now he collected two receipts? Yes. How much he collected? 40 lakh and 25 lakh. In that, how much is the demurrage charges and handling charges included into that? 70,000. It already included. Next. Next again, this shipping made in from the Cochin port. This is made on Mumbai port. But here payment is made in New York. Now tell me, point 1 and point 2. 172 section is attracted or not attracted? First give a reply. I'm seeing your comments on my phone. So please give your reply. Give a reply. Okay. So in both the cases, it will be attracted. Okay. Next. See here. See here. See here. Yes. Very good. Very good. Very good. Super. 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 Fantastic. Everyone is following. So now next one. Mr. X has collected rupees 42,70,000 in India on March 3rd, 2025 for the goods shipped from Karachi to California. Karachi to California. Karachi is not in India. California not in India. Goods shipped from Karachi to California. 172 will apply or will not apply? You will tell, I will listen. Participate. Participate. Continuous efforts. Participate. Will attract, will not attract? See, almost 100 students are in live. Everyone should reply. Everyone should reply. This live is for you. This live is not for me. Participate. Participate. Will not attract. Why it will not attract? Because section 172 will come into picture only if the goods are shipped from a port located within India. So let us see. 44B you forget. Let us see 172 assessment first. See, accelerated assessment under section 172 for the first two receipts. Let us see. Collections from the goods shipped in the Cochin port, 40,000. Okay. Deemed income, 40 lakh into 7.5, 3 lakh. Collections from the goods shipped at Bombay port, 25 lakh. Deemed income, 7.5, 1,87,500. Recovery of tax in first case. Okay, recovery of tax in first case. 3 lakh rupees is the income. On this, we have to pay tax. Na? 3 lakh, non-resident ki 40% plus 4%, 1,24,800. Second case, 1,87,500 into 40% plus 4% says 78,000. Total collections. Okay, total collection of tax. Here, if you observe, collections made in India for goods shipped from California to, Karachi to California. How much it is? 42,70,000. 42,70,000. See, listen to the next one. Collections made in India for goods shipped from Karachi to California. 42,70,000. Okay. That 42,70,000 also assessed at the rate of 7.5. Sir, but that does not attract. Now, this is as per 44B. Okay. Normal class, I said, even though exam kit is not there, just for clarity, from exam point of view, you need to learn up to here for inter exams. Up to here, did you all understand or not? Only you should tell me. Up to here, if you understand, fantastic, we'll go to the next one. Tell me. Up to the box content. 44B you leave, that's not there for you. 40 lakh ki 3 lakh, 25 lakh ki 1,87,000 on that tax, on that tax. Everyone understood? Now, okay, now, see here. So what will happen now? On this 1,24,800 and 78,000, one amount will come now. That particular amount, whatever the amount that will come, that amount you have to pay and then you have to leave India. Means I am not giving you a chance till the next assessment year. Okay, you have to pay and leave. This is an exception to the general tax regime. Everybody understood? Next one. Sir, I'm not going to talk about 44B now. So let's go to 174. Assessment of persons leaving India. Assessment of persons leaving India. Sir, what is this assessment of persons leaving India? See, it appears to the AO that an individual may leave India in the current assessment year. He has no intention to return. He has no intention to return. Sir, what does it mean? What does it mean means, I will give you an example directly. See there. Person, Mr. X, AO came to know that on 12th February 2025, that person is permanently leaving India on 12th April 2025. What an AO can do in this case? Okay. So first, very, very important. They can cross you in the examination through these questions. So please be very, very clear on your understanding. Assessment of persons leaving India. 174. Conditions attracting the section. Okay. Let us see. It appears to the AO that individual may leave India in the current assessment year. He has no intention to return. Then what is the fear that department will get? If you do not return back to India, if you earn any income within India, then who will pay tax on that? Therefore, I will not wait till the next assessment year. I will be assessing you to the tax in the same year. What if the conditions are satisfied? total income of that individual shall be chargeable to tax in the current assessment year for the period between the date of expiry of the previous year till the probable date of departure. Read this properly first. Later you can take a question that came in exam already. Read the content. Please, everyone, read the content properly. Okay, have you read? Yeah. See here. See here now. I gave time for you to read as well. What if the conditions are satisfied? Total income of that individual shall be chargeable to tax in the current assessment year for the period between the date of expiry of previous year till the probable date of departure. Till the probable date of departure. Power of AO to estimate the income. AO may estimate the income of the individual for previous year or any part if it cannot be readily determined under this act. Separate assessment shall be made in respect of total income of previous year and the current assessment year. Sir, how to understand this if question comes in exam? See, there is a person, Mr. X. AO came to know that on 12th February, that person is permanently leaving India on 12th April 2025. On 12th April 2025. Listen carefully. AO came to know that Mr. X is going to leave India and he will never return to India. On which date he came to know? Okay, he came to know on 12th February. When he will be leaving? 12th April 2025. 12th April 2025. What? What AO can do in this case? See, listen. AO in this case has a power to assess the income to tax on acceleration basis. AO in this case has 3 assessments. Listen, very, very important. Either confusion, you will do mistake in exam. That's why they will ask in exam. Okay, see. AO in this case has power to assess the income to tax on acceleration basis. AO in this case has 3 assessments. Regular assessment for the previous year 23-24. Okay, regular assessment for the previous year 23-24. This assessment might already be completed on or before 30th September 2024. Over. Next, accelerated assessment for the previous year 24-25. Normally, 24-25 previous year income, when you will assess to tax, I will assess to tax in the next assessment year. Means what is the due date? 30th September 2025. Till then I have to wait, but I will not wait. Total income between 1/4/24 to 31st March 24. Next, accelerated assessment for previous year 25-26. You are leaving India on 12th April. Means from 1/4 to 12/4, you have to actually pay tax in 26 year. But I will not wait till then. As per the rates given in part 3 of the first schedule, all these will be assessed to tax in the same year, that is in the year 2025. 31st March 2025, he will complete assessment for this year. I will not give time up to September, and this I will not give time up to 26. I will complete within that particular date itself. Did you all understand this discussion clearly? Yeah, this I am not going to discuss. This is easy concept. These two everyone understood clearly. Complicated concepts we are going to discuss. Everybody understood this or not? Understood this too? So one last time I am repeating. I have no business to repeat, but still I am repeating because any doubt if come, because most of the students income tax means their thought process starts from income from salary. But you are not understanding that tough papers, they are asking questions from the basics of income tax where you leave. So please ensure that you are understanding every point clearly. I repeat, there are 3 assessments. First assessment you leave. Accelerated assessment, let us see. For the previous year 24-25, normally you should give time up to September 30th, 2025. But I came to know on 12th February 25 itself that you are leaving on 12th April. Therefore, on 12th February, I will ask you to pay the tax. On 12th February, I will ask you to pay the tax. Okay. 12th February, what you will ask me? 12th February, I will ask you, pay the tax. Pay tax on what? Pay tax on income earned till now. Income earned till now, pay the tax. Sir, for the remaining part, March 31st, estimated basis, you will pay the tax. Which basis? Estimated balance income is there na, from 13th February till 12th April 2025. That I will estimate how much will be there. So the provisional basis they will estimate, and you have to pay the tax, and then you can leave India permanently. Okay, I will not wait till 12th February or up to 24, 25, 25, 26. I will not wait. Okay, so everyone understood the concept clearly? Done. Next, these are all simple concepts only. Next, let us come to some other important areas. Yeah, income definition. Income definition, there are totally 18 points in income definition. How many? 18. All 18 I am not going to cover. What is important and complicated I will cover. Okay, first, profits and gains is an income. Profits and gains from business or profession, profits and gains from capital gains, or even other sources also can be there. Okay, next. Income includes a dividend. So dividend includes a deemed dividend. So income includes dividend. Dividend includes a deemed dividend. So all these form part of income. Next. Some important things let us cover. Not all are important. I will go to the main concepts directly. Yeah. See the schedule once. Tax liability computation sheet. Income from salary. How you have to present the answer in exam? Income from salary. Salary income. Allowances. Perquisites. Gross salary. Standard deduction 50 or 75,000 accordingly. If you are following the normal tax, the old one, 50. If you are taking the default, which is alternative regime, 75. Entertainment allowances minus professional tax. Taxable income under the head salary. House property, adjusted net annual value minus deductions will be the taxable income under the head house property. PGBP you already know, some will be added, some will be deducted. Capital gains minus exemptions, net capital gain. These all are the things. Finally, you will get a gross total income. Okay, gross total income. Set off and carry forward net gross total income, and from the deductions, total income liable to pay the tax on this tax liability as per the applicable rates. Everyone understood the schedule clearly? A taxing schedule. Everyone, tax liability computation schedule. Everyone understood clearly? If you give a reply, we'll go to the next one. Residential status will begin. Okay. Everyone, listen carefully. Every question that comes in exam, final step will be tax liability computation. If you don't know the rates properly, you are losing at least 5 to 6 marks in the exam. So pakka, note down. Okay. If you are not aware of tax rates, surcharge, marginal relief properly, you are going to lose minimum 4 marks in the day after tomorrow exam. In the clarity, no one will tell. I am telling very clearly in a simple English. If you are not aware of tax rates, relief, surcharges, marginal relief, you are going to lose 4 to 5 marks in day after tomorrow exam. Clear? Everyone. Shall we continue? Everyone, shall we continue? Yeah. So point number 1, concept 1, taxation of individuals. Taxation of individuals. For individual HUF, AOP, BOI, AJP, whether you are a resident or a non-resident. Okay, normal tax rates. Normal tax rates for individual HUF, AOP, BOI, and AJP, artificial juridical person, whether you are a resident or a non-resident. Okay, what will happen? Individual not being a senior citizen or a very senior citizen. Okay, very senior citizen, or super senior citizen or very senior citizen. Other than, then up to 2,50,000 no tax. More than 2,50,000 up to 5 lakh 5%. More than 5 up to 10 20%. More than 10 lakh 30%. These are the tax rates applicable for a person being a individual HUF, okay, AOP, BOI, AJP, whether resident or non-resident, not being a senior citizen or a very senior citizen. These are the rates. Tell me, what are the rates? Up to 2,50,000 no tax. 2 lakh to 5 lakh 5%. 5 lakh to 10 lakh 20%. More than 10 lakh 30%. Okay, from this what you have to understand, you should remember that no 10% tax rate. So 10% tax rate illa. So don't remember that way in normal tax regime. Next, no sir, I'm not like that. I am a senior citizen, means my age is 60 years or more, but less than 80 years, sir, in the previous year. In the previous year, I did not cross that. Then what will happen? In that case, just one difference will come. 50,000 exemption is there. Means what? Here up to 2,50,000 no tax, na? Here up to 3 lakh no tax. Remaining everything same. And previously what we have done? 2 lakh to 5 lakh, 5 lakh to 10 lakh, more than 10 lakh. Na? Here 3 lakh to 5 lakh, 5 lakh to 10 lakh, more than 10 lakh, 5 to 20, 30. Remaining everything is same. Also here the same rule will apply. What is it? No 10% tax rate. Next, very senior citizen. Sir, very senior citizen, what difference will come? Very senior citizen category, there will be no concept of the first part. Means what? Up to 5 lakh, so no tax. 5 to 10, more than 10, that's all. Means this one will be missing here. Okay, directly 5 to 10, more than 10. There is no 5% rate and 10% rate. So no 5% and 10%. Finally, I have written there is no 10% for normal tax regime. Normal tax regime. In that 10% rate I will not be there. Up to here, I am putting it before you. Everybody understood the rates clearly? Are you all taking the photograph into your mind? Everyone, are you all taking the snap in your mind? Are you all taking this into your mind? See here. Now what you have to do is the best mental technique to remember things. Okay, every person will ask me, how will you remember all sections, all these? Right? First, what you have to do is 1 minute time I will give you. Okay, 1 minute time. What we completed till now, I will just read out. Okay, your work is just close your eyes, go back to the scenario, what we discussed. Okay, and whenever the concept is completed in your mind, you fix that, yes, I completed this. Then I will come up to here. 1 minute we will do all these things. Okay, I'm making it full screen. So see here, just what you need to do, manifest properly, close your eyes. Okay, go back to all the concepts. I will tell the concepts one by one. You will just recollect them. 1 minute after, I will ask you whether you could recollect everything or not. Okay, first one. Income tax is a tax on total income. Income tax is a tax on total income. Income tax is a tax on total income, not on each head. There are two types of years, assessment year and previous year. Answers should come into your mind. Next, what is a previous year? Wherever your mind could not recollect, that you have to mark on a paper. Means there is a problem with you that you could not remember that you need to put extra efforts now. Previous year, assessment year. Books of accounts you can maintain any year, but income tax you should maintain only financial years. So you need to quarterly break up and do. Different previous years are possible for different sources. Think whatever we discussed. Next. Accelerated assessments, non-resident shipping business. Accelerated assessment, non-resident shipping business. I hope every one of you are closing your eyes. Think of all the things, whatever we discussed till now. What are all the points you remember? Non-resident shipping business. What is the presumed tax rate? On that, what is the rate of tax applicable? What is the cess you need to apply on that? That's the most important one. Next one. Okay. Next issue. Tax rates. Tax rates. I am not a senior citizen. I am not a super senior citizen. I am a normal person. I am a normal person and wanted to apply normal tax regime. The old one. What will be my tax rates? 4 slabs. Okay. 4 slabs. I am a senior citizen. Senior citizen. 4 slabs. Very senior citizen. 3 slabs. That's it. Completed. Now every one of you tell me, could you recollect 90% of whatever the contents we discussed till now? Could you recollect 90% of the things we discussed till now? Everyone, I'm talking to you. Very good. That's it. This is how we are going to do each and every topic once completed. Recollect, and then we'll move on to the next one. Okay. Next. Now, I will go to alternate regime and then come back to surcharges. Alternate tax regime. For the assessment year 25-26, 115 BAC, subsection 1. There is some change, some difference will come. What difference will come? See, total income we need to consider on a different footing. Up to 3 lakh of total income, no tax. Slabs will differ now. 3 lakh to 7 lakh, 7 lakh to 10 lakh, 10 lakh to 12 lakh, 12 lakhs to 15 lakhs, and more than 15 lakhs. These are the rates that were given. Okay. So the total income, 3 lakh, 3 to 7, 7 to 10, 10 to 12, 12 to 15, more than 15. These are all the variety of rates that are given. Okay. So what are the rates? Rates fall like this. 5% will grow, but for the last rate, 10% growth will be there. 0 plus 5, 5, 5 plus 5, 10, 10 plus 5, 15, 15 plus 5, 20, 20 plus 5 will add directly there is a rate called as 30. So there is no in between 25% rate. That's the only thing that you need to remember in this connection. Okay. So 3 to 7, 7 to 10, 10 to 12, 12 to 15, more than 15. Okay. Next. These rates as aforesaid are applicable for individual HUF, AOP, BOI, AJP. Alternate tax regime is now the default tax regime. Okay. Surcharges rate we will see. First, let us see the tax rates on companies. Domestic company. Which company? Domestic company. Turnover or gross receipts of previous year 22-23. If it is not exceeding 400 crore, the rate of tax applicable will be 25%. In all other cases, it will be 30%. Foreign company standard tax rate will be 35%. Standard tax rate will be 35%. You may ask a question, sir, if a foreign company tax rate is 35, non-resident shipping previously you taxed him at 40%, then what is the logic there? There, non-resident is an individual. Is it foreign company 35? Adi non-resident, that's all. He is a non-resident individual, not a non-resident company there. Mr. X. That's why 40% rate. Doubts clear, everyone? That doubt also some people might have got. Clear? Everyone, clear to that point? So, what is the point here? We are going to discuss about the alternative regime. Up to 3 lakh no tax, 3 to 7 5, 7 to 10 10, 10 to 12 15, 12 to 15 20, more than 15 is 30% tax rate. These are the tax rates under the alternative tax regime. So, taxation of companies, domestic company, foreign company. Domestic company, you have to check the turnover of the previous year 22-23. If it is not exceeding 400 crore, 25% tax rate or else 30%. Surcharges I am going to discuss separately. Okay. Next, firm, very, very important for exam. Normally, the tax rate on the firm is 30%. Surcharge, 12% only if the total income exceeds rupees 1 crore. So, surcharge rate is 12% only if the total income exceeds rupees 1 crore. Cooperative society, tax rate up to 10,000 10%, up to 20,000 10 and 20 more than 20 will be 30%. And technically they are charging tax at almost everything at 30%. Maximum up to 20,000 they are charging at a lower rate. Anything above 20,000 30% slab. Surcharge same as a domestic company, These are all the rates of taxes applicable. Now we are going into the most important segment. 15 minutes I will spend on this because every chance is there this attempt question can come. Concept is surcharge computation. Enna computation here? Surcharge computation. Let us see. First of all, up to here, I really appreciate everyone's seriousness. All the 100 students were in live without any distraction. Glad that you are all very serious now. My point is up to here, whatever we discuss, understood or not? Everyone. Understood? Okay. Next. Surcharges, please be careful here. I am telling you again. Question they will intentionally give total income exceeding 50 lakhs. Surcharge will apply. Whenever surcharge apply, generally marginal relief will also come into picture. So, institute will test your knowledge in both with one single question. So, please be careful in listening to this concept. What is this surcharge? Surcharge is not, surcharge is not tax on income. It is a tax on the tax. It is a tax on the tax. Okay. So what is the surcharge rate? If the total income is less than or equal to 50 lakh, whether it is a special income or whether it is other incomes other than special, no surcharge. Means if your total income is less than or equal to 50 lakh, no surcharge on special income, no surcharge on other income. If your total income is more than 50 but less than or equal to 1 crore, 10%. Whether it is special income or whether it is other income, your surcharge is 10%. If the total income is more than 1 crore but less than or equal to 2 crore, 15% is a rate. If total income is more than 2 crore but not more than 5 crore, 15% and 25%. If total income is more than 5 crore, 15 and 35%. Total income more than 2 crore, 15 and 15%. This is the table. I am not discussing anything. I am not logically explaining anything. We will do illustrations on this now. But before that, I want every one of you, see, what is this special income? LTCG under 112A, STCG under 111A, dividend income, LTCG for other incomes under section 112. These three are stock market transactions. 112A, 111A, dividend on shares. These three are special incomes. Along with that, another special income is LTCG under section number 112. Okay, other kinds. This is the situation. Point 1, 2, 3, 6. Hey, see the marking. Point 1, 2, 3, 6. In these three cases, in these four cases, total income including the special income shall be considered. Okay, total income including this special income shall be considered. In these two cases, 4, 5, total income excluding special income shall be considered. Sir, I did not understand, sir. I understood the rates, but I did not understand these. I will give 2 minutes time. First read this and absorb the content into your mind first. Okay, absorb the content. Once it is done, we will do exam questions now. Okay, whatever the questions have already been tested in exam, we are going to do them. Everyone in live, please read surcharge rates properly. We are going to do exam questions. Okay, have you all read the point? So now we are going into the concept of surcharges. So please clearly see here, what is the main subject matter of surcharge rates? Let's have a look. Again, I'm telling you, once the surcharge rates are completed, I will do marginal relief. I will do marginal relief. After marginal relief is completed, immediately I will be going into the concept relating to agriculture income and composite business income. Expected question for this exam. Okay. So expected questions for this exam we are going to begin. Once this is completed. Okay. After that, I will go into capital gains. Whether to listen or not to listen, whether to stay live or not is entirely your call. Okay. So I'm telling you very clearly, this particular session will be the game changer for the next day class, because we are going to cover all the important significant issues relating to the income tax. On bigger issues we are going to complete. Technically sound issues, PGBP, all these things we have recently done as well and uploaded in YouTube. So students may think already we completed very recently. Now why to cover that? That's why I'm not following the sequence of house property and PGBP. I'm following the sequence. First this will be completed. Next I will go into capital gains. So capital gains summary we require now. Are you clear or not? Because in the recent times I did not do any summary on capital gains. I have done a lot of summary on PGBP. 100 adjustments, everything, all so many things we have done on IFHP, PGBP. So something is not done on capital gains. That we are going to do now. So please concentrate, have seriousness. It is your exam, na? It's not my exam. So please listen carefully. Have your attention here. So point number 1, surcharge rates. There are bunch of surcharge rates given. What they said, total income up to 50 lakhs, na? Also no surcharge. If your total income is more than 50 lakh, including all incomes. Okay, total income now, which income? Total income means what? Total income including special incomes and other incomes. All incomes put together exceeds 50 lakh, but it does not exceed 1 crore. Okay, then surcharge rate on special incomes is 10%, other incomes also 10%. Okay, my total income is more than 1 crore, but not more than 2 crore. Okay, but not more than 2 crore. Then 15%, 15%. 15%, 15%. From up to here, you read first. So total income up to 50 lakhs, no surcharge. 50 to 1 crore, 10%, 10% both the cases. Total income more than 1 crore, but not more than 2 crore, 15%, 15% both the cases. Up to here confusion illa. Now see, total income, total income more than 2 crore, more than 2 crore. That's it. How much it will be? 15%. More than 2 crore, how much it is? 15%. So what they say, up to 50 no surcharge, up to 50 no surcharge, 50 to 1 crore 10%, 1 to 2 15%, more than 2 also 15%. Here 1, 2, 3, 6. In these 4 areas, when I say total income should include special incomes and other incomes all together if that exceeds 15%, 15%. Next, point number 45. Point number 45. Total income more than 2 crore but not more than 5 crore. Total income more than 5 crore. Point number 45. Total income exclude special incomes. Means what? Special incomes are there. Special incomes are there. Exclude the special incomes. Other incomes are there. Na? Other incomes say more than 2 crore but not more than 5 crore, or more than 5 crores are there. In that case, 15% on special income, 25% on other income, 15% on special income, and 37% on other incomes. Like this, student is not able to remember. Therefore, after analyzing the entire bare provisions of section 115 BAC proviso, where surcharges are given in the Finance Act, I prepared one easy summary schedule. Okay, Pakka, nowhere you might have seen this. I only said so many times in the revision classes. Okay, if you can see this chart and remember, there can be no question that can corner you in exam. See, total income is up to 2 crore. I repeat, total income is up to 2 crore. I repeat, total income is up to 2 crore. If total income of a person is up to 2 crore, slab rates and surcharge. Up to 50 lakhs, no tax. More than 50 lakhs, but not more than 1 crore, 10% is the surcharge. Okay. More than 1 crore, but not more than 2 crore, 15% is the surcharge. These are the rates applicable for both special incomes as well as other incomes. So, if your total income is up to 2 crore, then up to 50 lakhs, there is no surcharge. 50 to 1 crore, 10%. 1 crore to 2 crore, 15%. On what income? On other incomes as well as on the special incomes. Up to here, everyone understood or not? The students in live, please give a reply. All the students over live, up to here, everyone understood clearly? Total income up to rupees 2 crore. Okay, next. Total income is more than 2 crore. Total income is more than 2 crore. Okay. If the total income is more than 2 crore, then listen carefully. If total income is more than 2 crore, I'm coming back. If total income is more than 2 crore, under these 3 cases. Okay, see there, see the screen. Observation. If total income is more than 2 crore, okay, special incomes ki surcharge is 15% straight. Means what? Special incomes surcharge is 15% over. Another point also over. From this table A, I prepared this simple table. Next, total income is more than 2 crore. Okay, total income is more than 2 crore. Other incomes up to 2 crore. Then surcharge will be 15%. Okay, surcharge will be 15%, this category, 15%. If other incomes is more than 2 crore, but not more than 5 crore, surcharge is 25%. Other incomes are more than 5 crore, then surcharge will be 37%. How to understand? I will give an example. Total income 2 crore, na? My total income is 10 crore. Okay, 10 crore. Special income 1 crore, other income 9 crore. Special income 1 crore, na? Special income 15%. So on special incomes, you will calculate the tax. Okay, on that, again surcharge of 15% will be added. Okay, next. How much other incomes are there? 9 crore. 9 crore falls under which slab? Third slab. On this 9 crore, you will first pay the tax. Yes. On that, again 37% surcharge will get added. Everybody understood this computation clearly or not? Everyone. Understood the computation clearly or not? Okay, everyone? Okay. Now see here. Alternate tax regime if you take and a default tax regime, the alternative tax regime, which is the default tax regime, if you take, in that case, do you know what will happen? Everything is same. Anything more than 2 crore, anything more than 2 crore, 25% is the surcharge, and there is no concept of 37% there. So alternate tax regime, if you adopt, surcharge rate stops with 25%. Means even if there is any excess, you will be taxed only to the extent of 2 crore. And 2 crore ke what surcharge will get applied, 25%, that will only apply for the entire. So there is no concept of more than 5 crores concept in case of alternate tax regime. So if you adopt alternate tax regime, the maximum surcharge rate will be 25%. Okay, that's what I have given. Up to here, I hope every one of you understood clearly. Sir, everyone, please reply. Surcharge concept, everyone understood clearly or not? Surcharge concept, everyone understood clearly or not? Okay. Rather than asking this way, I will show you questions as to how to understand. Okay. See, important points to note with respect to alternate tax regime and regular tax regime. Basic exemption limit will change. Normal tax regime, senior citizen ki 3 lakh, 5 lakh, 2 lakh 15 other cases. Here for all 3 lakh. Okay, for all 3 lakh. And if you go for, take this a snap if possible. Okay, take a snap of this. If you go for alternate tax regime, these are not allowed as a deductions. Leave travel concern, HRA, special allowances, MPML allowance, entertainment allowance, interest on housing loan. Okay. Next, expenditure on scientific research in some cases. Deduction under 35D will not, AD will not be given. 80C to 80U except 80CCD, CCH and 80JJAA. But all these remaining things will be allowed. Okay. This you need to remember. Yeah, there is no scope for this. You have to remember that these are not allowed, but these are allowed. Everybody, did you understand this concept clearly? Yeah. Saket, no worry. You can take rest. Okay. This will be uploaded. But my point is, if you do along with live, stress will not be there for the tomorrow. That's the only intent. Okay. So see here. A question is tested in exam like this. Okay. A question is tested like this in exam. Expected question, Jan 26. 4 marks. Try to solve this. 4 minutes time. Please try to solve this. Okay. Have you tried, everyone? Everyone, have you tried? See, this is a proper exam question. So this is expected question for Jan 26 as well. How to solve, I will tell you. See here. First, regular and alternate regime. Income from salary. HRA. Regular tax regime, they will give exemption up to 60,000. Okay, exempted part. But here HRA exemption not allowed. But standard deduction 75, here 50. So net tax liability will be like this. Salary. Next, income from other sources. Dividend, interest, both sides taxable. Deductions under 80C, D, G not allowed. So total income, this is the thing. Tax liability computation. Answer completed. For that, why you are breaking your brain? Really, I don't know. 4 marks question came. Okay. Now tell me, is there anything difficult in this? Is there anything difficult in this question that came in exam? In this 4 marks question, did you find anything difficult? Everyone reply, I am talking to you. Everyone live, please give a reply. Did you all understand at least the computation? Did you all understand this computation or not? Yeah. Next. See. Do this. Another exam question. Expected question. Jan 26. 4 marks. All expected questions I kept in one place. Try solving this. This is an expected question for the Jan exams. Please be careful. Okay. I'm showing the solution to you now. See here. Everyone, please concentrate on the solution properly. See the solution. This is an expected question for the coming exam. Please be careful. Show some importance. When I am putting this much efforts, you should put 10 times better efforts than me. See there how we need to solve the question. Okay. Can I move forward, everyone? Hey, if you give a reply, we'll go into the next segment. Can we move to the next one? Can we start with the next one or not? Hey, there is nothing to discuss in this case. I'm just telling you that there are two things that you need to learn here. Number one, additional depreciation is not allowed in case of alternate tax regime. Observation number one. And surcharge rates are only 25% when it comes to alternate regime. Whereas surcharge rate is at 37% when it comes to the regular tax regime. Okay, wow. Next, cess is anyway same across any kind of tax regime that you follow. Okay, so this is how the question can be tested in examination. So please be extremely cautious. And again, I'm telling you how this question can be tested. They can ask this question in two ways in exam. They can ask these kind of questions for 4 marks, but sometimes institute will get crack at that time. This question they will give in MCQ 2 marks. This all you need to do on calculator, and you need to tell the final tax liability. Which is the right answer you need to tell. So that's why we are doing all this exercise now. Why this much of hard work here, or else we can directly read and go, na? So that's not our intention. Okay, next, see, illustration on surcharge. Sorry, surcharge illustrations. I don't want to waste time. I will go directly into the concept of marginal relief. I will go into the concept of what? Marginal relief. Marginal relief is one of the most important concepts that they ask at CA interlevel. What is marginal relief? Marginal relief means whenever your tax is just crossing a limit such that the surcharge that is included is blasting your tax liability, then a relief will be given called as a marginal relief. Rather than saying like the through numbers, let us see a question how it can come in exam. Okay, see here, everyone. Assessee is X, age 30 years, assessment year 25-26, opted out from alternate tax regime. Opted out from alternate tax regime. That means he is not into the alternate tax regime, he opted out. So case 1, his tax liability is, his total income is 50 lakh and it is 51 lakh. Tax liability, if it is 50 lakh and you are opting out of the tax regime, alternate tax regime, means what you will follow? You are 30 years, you are X, you are resident, assume you are 30 years, not a senior citizen, not a very senior citizen. You will come under the slab one. Now everyone tell me, what is the slab? Up to 2,50,000 no tax, up to 2,50,000 no tax, more than 2,50,000 but not more than 5 lakh. Not more than 5 lakh, 5%. 5 to, are you remembering? 5 to 10, more than 10. So on that basis, we need to pay the tax now. 2,50,000 no tax, 5%, 20%, balance total 13 lakh 12,500. Why? On first 2,50,000 balance up to 2,50,000 no tax. 2,50,000 to 5 lakh means 2,50,000 is there. On that 5%, 12,500. On this 5 lakh, 20%, 1 lakh. More than 10 lakhs, how much is there? 40 lakhs. 40 lakhs into 30%, 12 lakh. Total is 13 lakh 12,000. Okay, no surcharge. Why no surcharge? Because total income is not exceeding 50 lakh. 13,12,500. Next, case 2. My total income is not 50. My total income is 51 lakhs. Then how the tax liability will be computed? Look here. Up to 2 lakh 50, no tax. 12 lakh 15, 12 lakh 5,000, 1 lakh. It is same. Balance, how much is there? 41 lakhs is there. On that 41 lakhs, 30% comes to 12 lakh 30,000. Total it comes to 13 lakh 42,500. But what is also happening here? Since your total income is more than 51 lakh, there is a tax on tax. Okay, tax on tax. What is the surcharge rate? It is 10% in both the cases. Okay, 10%. 13 lakh 42,500 into 10%, 1 lakh 34,250. Total became 14 lakh 76,750. Now a joke happened. What is a joke? Now my income is exceeded by 1 lakh. Previously it is 50 lakh, where I paid a tax of 13 lakh 12,500. My income came to 51 lakh. Now my tax liability is 1 lakh 14 lakh 76,750. Means for the 1 lakh increase in additional income and a marginal income of 1 lakh, how much marginal tax you are paying? 1 lakh 64. Which country la fool will pay like this? And 1 lakh extra income ke 1 lakh 64,250 tax you will pay na. And rather than earning income, people will sit silent now. Country will not grow. Therefore, they said, I will do one thing. What is your additional income? 1 lakh. What is your additional tax? 164,250. Therefore, your tax will be restricted to the additional income. Your tax will be restricted to additional income. How much relief will be given? 64,250 will be given as a relief. That's it. Everybody understood? Everyone understood? I want a solid reply from all of you. Understood or not? Okay, va? So, steps and procedures in marginal relief computation. Okay, steps and procedure in marginal relief computation. Non-corporate assessees. Okay, how to do? Tax on total. Step 1. Tax on total income and surcharge. First calculate normally everything. Add surcharge also. Now, for example, tax on total income plus surcharge. Surcharge will apply as per the slabs. 50 lakh, more than 50 lakh, more than, not more than 1 crore. Slab rates on that basis we will do. So tax on total income plus surcharge you do. Next, surcharge when you apply, total income we will consider a total income 50 lakh, 1 crore, you see that. On that you pay the tax. You calculate the tax and without surcharge. So total income including surcharge. Total income to the extent no surcharge is leviable, do that. Next, total income minus 50 lakh. Total income minus 50 lakh, one amount. Marginal relief will be step 1, minus step 2, minus step 3. Like this, if I tell na, you may not understand. But we will do one question, full clarity. Here, life no doubt will come. See, compute the tax liability of Mr. B, aged 51, under the default tax regime having a total income of 1 crore 1 lakh. Okay, let's see. Assessee B, total income 1 crore 1 lakh. Means 1 crore 1 lakh means what is happening here? My income is exceeded by 1 lakh beyond that 1 crore. Because of that, I am coming under the 15% surcharge rate. Correct? So see here. What is the step 1? Calculate total income and surcharge. See, first what to do? Up to 3 lakh, no tax, default regime. 3 to 7, 4 lakh. On that 4 lakh, 5%. 7 to 10, balance 3 lakh. On that 3 lakh, 10%. 10 to 12, 2 lakh. On that 15%. 12 to 15, 3 lakh. On that 20%. More than 15. More than 15. 1 crore 1 lakh na? 1 crore 1 lakh up to 15 you have taken. Still 86 is there. On that 86, 30%. 25 lakh 80,000. So what is the total tax? 27 lakh 20,000. Surcharge 4 lakh 8,000. Total 31 lakh 28,000. Now let us understand clearly. Step 1 we completed. Tax on total income and surcharge. Okay. Up to 1 crore, what is the tax? Let us see. Up to 1 crore. Okay. You crossed 1 crore by 1 lakh. For that you are paying this. Up to 1 crore, what is the tax? Up to 1 crore, 1 lakh 40 plus this much. Hey, this is same na. This amount is same. Sorry. Up to this amount same na. 20 plus 30, 50. 50 plus 30, 80. 80 plus 60, 140. 140 same. Balance 1 crore ke we are taking na. So 85 into 30%. 26 lakh 90. Surcharge 10% will apply. 2 lakh 69. So 29,59,000. From this, what you understand? What you understand is total income 1 crore 1 lakh. Standard limit is 1 crore. 1 lakh is additional income. 1 lakh is the additional income. Marginal relief will be step 1 minus step 2 minus step 3. So 31,28,000 minus 69,000 will be the marginal relief that they will compute. So this one will be the relief. You need not pay tax to this extent. Everyone, please reply. Understood this concept clearly? Yeah. Everyone. Everyone understood clearly? Okay. So now with this, we completed this particular area as well. Okay. Rebate under section 87A. In case of regular tax regime, applicability. Taxable total income other than special income if it does not exceed 5 lakh. Okay. Applicability. Taxable total income other than special income does not exceed 5 lakh. Rebate under 187A. 12 lakh 12,500 or tax liability whichever is lower. In case of alternate tax regime, taxable total income other than special income does not exceed 7 lakh. Okay. Then rebate under section 87A, 25,000 or tax liability whichever is lower. This you need not do any computation. Yeah. See, study material 1 or 2 small illustrations were given. You need to do that and close. Okay. So mainly these are all the things that I wanted to cover. Okay. Next one. See. Next, I am going into the most dangerous area in your syllabus called as capital gains. With regard to the capital gains, let us see what are all the things that we need to study. See, charging section, meaning of capital asset, negative list of capital asset, types of capital asset, determination of period of holding, definition of transfer, transactions not recorded as transfer, scheme of when transfer is complete and effective, scheme of computation, full value consideration, notional basis computation, expenditure on transfer, cost of acquisition, notional cost, cost to previous owner, cost to be fair market value, cost of acquisition in case of depreciable assets, cost of improvement, conversion of capital asset in stock in trade, conversion of firms, non-resident computation, transfer of bonus shares, right shares, liquidation, buyback, land building at both capital gain, reference to valuation officer, exemption, other related concepts. Okay, these are all the various areas. PGBP, when we start, not tomorrow I will deal about PGBP as well. 1 hour, like already PGBP I kept. Even after that, if you want, 1 hour I will anyway do for tomorrow, because tomorrow only 2 hours we will complete clubbing and other clubbing of income and set off. Max 1.5 to 2 hours we will complete set off, carry forward, clubbing and deductions. So you will find time. At the time PGBP 1 hour PGBP I will complete. At that time, adjustments, I gave 100 adjustments on PGBP recently uploaded. Listen to that. That covers all your exam points inside that. I took those 100 adjustments are taken from your exam questions. So deductions, if you cover properly tomorrow, PGBP and the deductions, they will give an exam that will be covered. If you listen to clubbing you will understand. Set off you will understand. So total income problem means what? If you understand all these, you need to integrate them into PGBP question. So PGBP already 100 adjustments I kept. So separate line did not cover now. Clear? So house property also I already uploaded there. So main thing that we need to do is we need to work out on capital gains. Are you understanding? So please listen carefully. Capital gains in relation to this section 45 to 55A are the concepts that we need to cover. Okay. Along with that PGBPA, agriculture income, there is a composite business income concept. There only I will be covering. Okay. One max 10-15 minutes I will cover agriculture income. Tomorrow I will upload one small video, 15 minutes. Full agriculture income I will cover there. Okay. Because now at the peak of the moment, I wanted to cover some important things. And moreover, you people have written the law examination. Mind will be in full stress. Now itself, you are pushing your limits. I know. Okay. But if you cover certain things in live, again, you need not do that. If you completely don't attend live and listen to what we are saying, you will sleep. Or your mind will go to different dimensions where you will not concentrate. So I am asking you, please stay live such that you can complete all these things in no time. Okay, va? See here. With regard to capital gains, first point number 1. First, capital gain ki charging section. Okay, everyone, we are going to start with capital gains. Before that, before even we start with the capital gains area, I just wanted to tell you before even starting with the capital gains concept, I just wanted to tell you capital gains will come for somewhere around 8 to 10 marks in exam. Directly they will ask a 6 marks question, MCQs la 2 marks, total income la 2 marks, and a total in total you will find 10 marks from this chapter called as capital gains. So important or unimportant means I will tell it's a most important area. Of course it's important. Okay, undoubtedly one of the important concepts in our syllabus. But what are all the most important areas? That's what we need to concentrate on. Okay. So first thing, you need to understand what do you mean by the charge of capital gains tax. Okay. Before even doing that, I will give you a 5 minutes break. Okay. Then we will start with capital gains. We'll start with capital gains. I will not take much time for this. Most important concepts I will cover. Okay. Then you can rest and you can cover whatever the areas you wanted to do. Okay. I don't want everyone sit live and do all these. I will cover to some extent capital gains as well. Later I will leave it for you to solve the questions and answers. Okay. Once you solve the questions and answers, then it will be free also for you in your mind to cover this particular area. Okay. I will give you 5 minutes break. Take a 5 minutes break and come. We'll start with capital gains and complete important areas of capital gains chapter. Okay. Can we continue? Everyone, are we good to go? Shall we begin? Can we start? Can we continue? Everyone who are in live, please come back. We are going to start with the most important segment, capital gains. By the way, everyone, recently I uploaded 1 hour video on full TDS. Did you complete that video, everyone? Have you watched that? The TDS one. Okay. So let us begin. Please, everyone, come back soon. Settle down. We are going to start with a very quick revision on capital gain segment. Okay. Okay, let's start. So first one, with regard to the capital gains, the first thing that we need to keep in mind is the charging section. If you don't understand the charging section properly, the revision or regular, you should first understand what is the charging section. Okay. Charging section says like this. This is the time not to read the provision, understand it, minute details, picking it out. That is not the thing. So directly we will go into the main discussion. So there are 5 conditions. If all the 5 conditions are satisfied, okay, if all the 5 conditions are satisfied, then capital gains will be charged on that particular income. Let's see. There should be a capital asset. There should be a capital asset. What is a capital asset? Capital asset as defined in section 2 class 14. Okay, capital asset definition is given. First, there should be a capital asset. Capital asset is transferred by the assessee. They are not saying sale, transfer. So transfer as defined under section 2 class 47. Transfer took place in the previous year, subject to exceptions. Where these exceptions are given? Section 45 exceptions are given. Next. So profit or gain arises as a result of such transfer. Okay. When I say profit or gain, loss also can occur. Okay. Next. Such capital gain is not exempt under 54 to 54H. If it is exempt, again it will not be taxable. So taxability of capital gain will come only 5 conditions are cumulatively satisfied. There must be a capital asset. It should be transferred by assessee. Transfer took place in previous year. Profit or gain arises as a result of such transfer. Such capital gain is not exempt under 54 to 54H. Okay. Next. Definition of capital asset. Definition of capital asset. Capital asset under section 2 class 14 is defined as under. Okay. Capital asset under section 2 class 14 is defined as under. Amendments are made in B and C. What are these? Let us see. Summary. Capital asset means A, B, C. 3 things are there. What is that? A. Property of any kind held by an assessee, whether or not connected with his business or profession. What is this? Let us understand. Okay. There is a property. Okay. Any kind, mobile, immobile, tangible, intangible, fixed or circulating, any kind, held by the assessee. Held by the assessee. What do you mean by held by the assessee? He should be the ownership. Okay, he should have the ownership. He said ownership. He did not tell registered ownership. Ownership. If you have ultimate control over that asset, that's it. You are treated as a owner. So there should be a property of any kind held by an assessee. Held by an assessee. So whether or not connected to his business or profession. Sir, I understood property, capital asset means a property of any kind held by an assessee. Up to there understood. What is this whether or not connected with his business? Just because of the reason that it is used for the purposes of business, we should not call it as a business asset. It is also capital asset. Sir, example, sir, there is a land. Land I am using, land, there is a land. I am using that land and building. I am using that land and building for my residential purposes. Or I am letting it out. Let out income is taxable under IFHP. But if I sell that property, that will become capital gain. I have a land and building used for my business. If you use it for business, okay. But if you are selling that property, again capital gains will get attracted. Understood? Because stock in trade is different. Capital asset is different. Stock in trade comes in trading P&L. Capital asset will come in balance sheet. If something is coming under balance sheet, that's all. It can never be regarded as a stock in trade. Always it will be called as capital asset only. Okay. Next. This is with effect from 1/4/2026. Therefore, this amendment is not for you. Okay. So, next. Adi A. This is B point. Okay, B. So foreign institutional, any security is held by a foreign institutional investor which has invested in such securities in accordance with regulations of SEBI. Therefore, they will not ask that question anyway, since it is applicable later on. So, mainly you need to read C point. Any ULIP, unit linked insurance policy, any unit linked insurance policy to which exemption does not apply under 1010D. Okay. Tomorrow, I am going to upload 5 minutes videos. Almost 7-8 videos I will release tomorrow. In that, 10 AA deduction, 10D deduction I will put. 5 minutes on this and 5 minutes on this. Maximum 10 minutes and 10 minutes. There you can understand what is this 10D and 10 AA deduction. Both I will put for your clarity sake. So, a 1010 dealer, to what extent it is not exempted, that amount will be treated as a capital asset. So, what are the capital assets? A, B, C, B anyway amendment applicable from the next year onwards. Mainly AC you need to answer. What is A? Capital asset means a property of any kind held by whom? The assessee, whether connected with his business or profession. Next. After that, next very important point is ULIP to which exemption does not apply. Next. Capital asset does not include in the negative list of capital assets. That's why, see here. Does not include 1, 2, 3, 4, 5, 6. 6 points are there. Does not include. So capital asset does not include what? Stock in trade. Okay. Number 1 completed. So stock in trade, consumables, raw materials held for business is not a capital asset. So any surplus na PGBP la taxable. Next one. Personal effects. That is to say, movable property. So personal effect is always a movable property. Immovable property can never become a personal effect. Therefore, I have given here, see here. Personal effect are movable. It includes wearing apparel and furniture. They are held for personal use by assessee or a dependent family member of assessee. Assessee may use it or any dependent family member of assessee may use it. Then I will call it as a personal effect. Okay. Following, though used for assessee personal purposes, cannot be regarded as personal effect. What are those? Jewelry, archaeological collections, drawings, paintings, sculptures, any works of art. Because these all things will gain value over time. Therefore, they are not personal effect. They are called as capital assets. Again, repeat. What we are reading? We are reading does not include category. Capital asset means any kind of asset, any property of any kind held by the assessee, whether used for the purposes of business or not. 1 point. Foreign institutional investor, anyway, leave it. C point will be ULIP to the extent not exempt under 1010D is also a capital asset. Next, capital asset does not include what? It does not include stock in trade, consumable stores, raw materials, etc. Next, personal effect is not a capital asset. What is a personal effect? It is a movable property. It is a movable property. It includes wearing apparel and furniture used by the assessee or by dependent family member. They are not treated as a person. They are not treated as capital assets because they are personal effects. Personal effects are outside the purview of capital asset. Next, following, though used for assessee personal purposes, but they are not considered as personal effect. What are those? Assets which gain value. Jewelry, archaeological collection, drawing, painting, sculptures, or any work of art. Jewelry, raise value over time. Archaeological collections, more and more period is going on, value will be more. Drawings, okay, 1800s one drawing and painting is found. 1900s drawing and painting is found. Yesterday, one person drawn a painting. Which will have more value? More the age, more the value. Next. So, as the time pass by, they don't depreciate, they appreciate. So, paintings also same. Sculptures, any work of art, these all will raise its value over time. Therefore, they are not treated as personal effect. They are treated as capital assets only. Next, see, they gain their values naturally. Gold or silver coins used as ornament for deities is not a personal effect. Means in our home, puja room, we made one gold coin and kept it to the Lord inside. That will not be treated as a personal effect. That is a capital asset. Why? That you are not using. You are using it on deities. Okay. This was held in the case of Maharaja Rana Hemant Singh versus CIT. Okay. Because section used the words use, not for the purpose of his personal use. Are you understanding? See here, bare actor, what they said. Certain things you should see. Personal effects, that is to say movable property, including wearing apparel and furniture, held for personal use by assessee, not used by assessee. It should be personally used by him. Section use the words use, not for the purposes of personal use. They did not tell like that. They said used for personal, not for the purposes of personal use. Okay. Next, occasional use. Is it a personal effect? Is it a personal effect? Some clothes are held by assessee only for ceremonial occasions. Okay. Though they are not used regularly or not at all used. Since it is held, okay, it will be treated as a personal effect only. Car or scooter is a personal effect. Securities is not a personal effect. Shares, etc. Jewelry, is it a personal effect? Yes. Jewelry will be treated as a personal effect only. Ornaments of gold, platinum, etc. Okay. Next, we are reading what is a capital asset or what is not a capital asset. What is not a capital asset? So, agricultural land, whether it is a capital asset or not. Agricultural land is of two types. Urban agricultural land, rural agricultural land. Urban agricultural land is a capital asset. Rural agricultural land is not a capital asset. Any agricultural land not being urban agricultural land is treated as a rural agricultural land. So, what is an urban agricultural land? See, listen carefully. This question was tested in exam multiple times. Students are consistently doing mistakes as well. There is a land that is covered by the area. That area is coming under a municipality. Okay. And the population of this municipality is more than or equal to 10,000 as per the latest census at first day of the previous year. Therefore, what they said, any agricultural land situated in any area, there is an area, land situated in the area, comprised within the jurisdiction of a municipality having a population of at least 10,000. Listen, this area population illa, this is municipality. In this, there is an area. In this, I have a land. They are talking about population of this outer box, first box. Okay, it should be more than or equal to 10,000. Then such particular land, agricultural land, is treated as urban agricultural land. Urban agricultural land. Listen carefully. Problem came like this to the department. There is a municipality. Okay. In that there is an area. In that there is a land. Whether this land is a agricultural, urban agricultural land, it depends on what is the status of this municipality? This municipality population is more than 10,000. Yes, sir, it is more than 10,000. Then this land is an urban agricultural land. If the population of this municipality is less than 10,000, then this is not an urban agricultural land. Automatically, it will be called as a rural agricultural land. But sometimes what is happening, let me explain. This is municipality. You are saying municipality should be there, in that area is there, in that agricultural land is there. But sometimes what will happen, do you know? There is a municipality. Okay. Just 100 meters away from the municipality. It's not in the municipality. It is away from the limits of municipality. One agricultural land is there. Now, if you call this as a rural agricultural land because it is not within the municipality, it is wrong. Because, for example, Chennai city stops with Tambaram. Example, okay, Chennai city stops with Tambaram. Tambaram, all these will come under the Chennai Municipal Corporation. Okay, Tambaram is a place which is away, almost at the outskirts of the city. Okay, example. At the outskirts of the city is located. So, Tambaram is within the municipality. If an agricultural land is located in a place like Tambaram, etc., then automatically what they will do is urban agricultural land. Let us say Chennai limits stops here. Okay, I have urban agricultural land 100 meters away from that municipality. It will have lesser value. It is near to municipality, it will have more value, though it is not a farm part of municipality. That's why they brought down another concept like this. What they said, is it a agricultural land? Yes, sir. Is it situated in an area? Yes, sir. Is it within a municipality? No, sir. Is it away from the municipality? Yes, sir. How many kilometers away? Less than or equal to 2 kilometers. Very, very near. Okay. That municipality is having a population of how much? More than 10,000, but not more than 1 lakh. Okay. So more than 10,000, but not more than 1 lakh. If that be the case, distance should be 2 kilometers. Within 2 kilometers, anything is there, I will treat it as a urban agricultural land only, though it is not forming part of the municipality. Next, there is a land. This land is situated in an area. This area is 6 kilometers away from the municipality. That municipality population is more than 1 lakh, but not more than 10 lakhs. In that case also, this land is treated as a urban agricultural land only. Same like that, 8 kilometers ki more than 10 lakh. Okay. Sir, how these 8 kilometers have to be seen? Grid? No. Shortest aerial distance, not to be measured in terms of approach by road. It should be straight line on a horizontal plane. Yesterday, general clauses cycle we discussed, na? That will be the thing. Next, what is not a capital asset? Tell me what is not a capital asset now. Number one, stock in trade is not a capital asset. Personal effect is not a capital asset. Rural agriculture land is not a capital asset. After that, fourth one is 6.5% gold bonds, 7% gold bonds, national defense bonds. These are not capital assets. Special bearer bonds and gold deposit bonds. These are not treated as capital assets. Everybody in the class, we completed the first segment discussion. Understood the point clearly or not? Everyone. One segment of discussion is over now in capital gains. Answer, did you all understand or not? Reply everyone. Have you understood or not? Okay. Next one. Important things I am covering. See, a farmer being a resident of Jaipur, a farmer being a resident of Jaipur, sold his rural agricultural land situated in Nepal and received rupees 2 lakhs over the cost of acquisition of land. Explain the taxability. As per section 2 clause 14, rural agricultural land in India, okay, in India, okay, rural agricultural lands in India is not a capital asset. In the given case, farmers sold rural agricultural land in Nepal, that is outside India, and therefore it is a capital asset and attract capital gain tax. Okay, understood? Everyone reply. Just a minute, I think visual has gone. Okay, everyone give a reply. Understood? Next one, see here. Types of capital assets. Section 2 class 42A, 2 class 42B, 2 class 29AA, 2 class 29B. There are two types of capital assets: short-term capital asset, long-term capital asset. Short-term capital asset is defined under section 2 class 42A, and short-term capital gain is defined under section 2 class 42B. Long-term capital asset is defined under section 2 class 29AA. Long-term capital gain is defined under section 2 class 29B. Next, definition of a short-term capital asset. Okay, instead of dealing with all those things, I will show you a tabular presentation of a broader analysis. Okay, see here, rather than reading theoretically, see this practical part. Okay, tabular presentation. What makes short term? What makes long term? Let us see. Whatever is not short term is automatically qualified to be long term. Let us see. Listed equity or preference shares. Listed equity or preference shares. First read this part. Okay. One thing you need to understand here. See here clearly. See all this clearly. All the cases, 12 months will be treated as short term. Within 12 months holding, if you sell or transfer, I call it as a short term capital asset, and the resultant gain is a short term capital gain. Okay, but in case of unlisted units of debt oriented fund, 24 months is the short term period. Okay, is what period? Short term period. And next, unlisted equity or preference, unlisted debentures, unlisted government security, immovable property and any other movable property, 24 months. And in simple language, how to understand? If it is listed, always it will be treated as 12 months as a short term period. But unlisted also sometimes will be treated as short term. When if it is unlisted units of UTI, unlisted units of equity oriented fund, unlisted unlisted ZCB, zero coupon bonds. Next, unlisted equity or preference, 24 months. Unlisted debentures, 24 months. Unlisted government security, 24 months. Other than stock market assets, immovable property is 24. Any other movable property, 24. So, if the transfer took place on or after 23/7/2024, these are all the periods of short-term or long-term basis. Okay. So, the only thing that you need to remember for exam is, see, unlisted units of UTI important. Unlisted units of equity oriented fund important. Okay, next unlisted ZCB. Though they are unlisted, 12 months will be the short term period. Any holding period beyond 12 months make them long term. Okay, what are the three things? Unlisted units of UTI, unlisted units of equity oriented fund, unlisted ZCB. Sir, if it is listed all cases, listed means it's 12 months. So unlisted generally means 24. But even though they are unlisted, in what cases they are 12 months taken as a short term? Unlisted units of UTI, unlisted units of equity oriented fund, and unlisted ZCB. Other unlisted 24 months, immovable 24 months, movable 24 months. Okay, so these are all the various things that you need to understand. Okay, so everyone please tell me, did you understand the rates clear, other time periods clearly? Yeah, what makes a long term and short term? I'm talking to everyone, reply. Understood? Okay, next. See this illustration. This illustration is on identification of whether it is a short term or long term. X purchases house property on 10th March 23. Transferred on 6th June 2024. The holding period, if you observe, it is less than 24 months. Therefore, it is short term. X purchases listed shares of Indian company. 12 months we need to take. May 10, 2023 to August 6, 2024. Yes, more than 12 months. Long term. Z acquires unit of equity oriented mutual fund. Okay. Z acquires units of equity oriented mutual fund. 12 months. August to August 10, 2024. Yes, long term. Okay. 12 months and 3 days they have taken. Actually, 12 months is required. X purchased diamonds on September 12, 2022 and gives the same to his friend B on December 31st. B transfers the asset on October 20, 2024. Diamonds comes under other mobile assets. Okay, 24 months. It is more than 24, long term. Next one. X purchases unlisted shares of a company. Okay, unlisted shares will come under 24 months category. That's it. Everyone understood the concept clearly? Yeah. Everyone, please tell me. Understood clearly? Not like this. You should tell the answer properly. Understood or not? Are you all having a clarity? Yeah. So, one point I need to tell here. X purchases diamonds on September 12, 2022. Gifts the same to the friend B on December 31st, 2022. B transfers it on October 20, 2024. Diamonds will come under other mobile assets. 2 years, minimum 24 months you should hold to call it long term. When I received the gift, December 31st, 22. When 24 months will be completed? December 31st to 24K. But I transferred asset only on what date? October 20, 2024. Until less than 12 or 24 months or more than a less than. Therefore, it should be short term. But why I have written long term? There is a section called as section 49(1). Period of holding of the previous owner should be considered in case of gift, etc. There in section 49. So you should not consider your holding period. Your holding period should be added to the previous holder holding period. So you should consider from September 12 to October 20, 2024. So long term. That's why. In case of assets acquired by way of gift, etc., section 49(1) will get attracted. Period of holding of previous owner shall also be considered. Everybody understood the concept clearly? Yeah? Everyone. Clear? Next. So definition of short-term capital gain, definition of long-term capital asset, definition of long-term capital gain. Any short-term capital gain means capital gain arising from transfer of short-term capital asset. Long-term capital asset means other than short-term capital asset. Long-term capital gain means transfer of long-term capital asset results in long-term capital gain. Next. Transfer concept. Okay, transfer concept. So many things will be there now. What is a transfer? Transfer in relation to a capital asset includes sale, exchange or relinquishment of the asset. Sale, exchange or relinquishment of asset. Okay. Next. Extinguishment of any rights. Compulsory acquisition under any law. Conversion of capital asset into stock in trade. Maturity of zero coupon bond. Maturity of zero coupon bond. Any transaction involving the allowing of possession of any immovable property to be taken or retained in part performance of a contract under Transfer of Property Act. Any transaction which has an effect of transferring or enabling enjoyment of any immobile property. These all will be included into the definition of transfer. Now doubt will come. Okay, now doubt will come. Sir, what is this concept, sir? Sir, what are all these points? As a student will remember one or two, 3 points they will remember. But what is all the remaining things? That's why. See here carefully. See here. First, transfer includes sale. Sale is a transfer. Exchange is a transfer. Okay, means what? Person 1 transferred property to person 2. Person 2 transferred property to person 1. This is conversion of preference shares into equity shares ki best example. Company is giving, okay, company is giving preference shares. Later they are giving back and they are giving equity shares for that. It is an exchange. Capital gains will get attracted. Relinquishment is a transfer. Relinquish means withdraw, abandon, or cease to hold. Relinquishment should be in relation to an asset. In case of relinquishment, asset will be given up by the person and continues to be held by some other person. Extinguishment is a transfer, means total destruction, etc. Okay. So these are all the theory points. I just wanted to discuss the practical contents of capital gains chapter. See here, very, very important discussion is going to start. Please listen. Computation of capital gains. Section number 48. How to compute capital gains? Capital gains ki schedule of computation is given. First, full value consideration. Full value consideration. Expenses on transfer. Deduct it. Net consideration it will become. First, consider the full value consideration. Next, deduct the expenses in relation to transfer. Net consideration will be taken. From that, remove cost of acquisition. From that, remove cost of improvement. Capital gains will come. From that, remove the exemptions. Balance will be the taxable capital gain. Balance will be the taxable capital gain. Okay. Now, note, expenses on transfer. Only such expenditure incurred wholly and exclusively in connection with transfer shall be considered. Exemptions under section 54 to 54H are not available to long-term or short-term capital gain in the same way. Some exceptions are not allowed in case of short-term capital gain. We will see when we come to exemptions. Next, treatment of securities transaction tax. See, in case of purchase of equity shares through a RSC or units of business trust through RSC, you will pay STT, but it is not allowed as an expenditure. So, in this expenses for transfer, STT should not be deducted because it's a statutory obligation. It is not an expenses in relation to transfer. Okay, it's a statutory obligation. It's a tax. Tax is never an expense. Okay, tax is a statutory obligation. So therefore, STT is not allowed as a deduction for expenses of transfer. Section 48 is completed. Theoretically, instead of reading as a table, we have read. Everyone, please reply. Did you all understand section 48 or not? Everyone, section 48, everyone understood clearly? Next. I will go into most important content, say. See here, compulsory question will come from this. Be very, 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 very careful. Already they tested this in exam. Okay, see here. Partition of HF. Second one is gift by individual or HF. 47.3. Okay. First I will cover gift individual. Why? Because if I cover this concept parallelly I can cover IFOS also. Okay, parallel I can cover IFOS also. First let me cover this. Okay. Once you understand this, IFOS la main point will be completed. Gift by an individual or HF. Section 47.3. Amendment with effect from 1/4/25. See here. Nothing contained in section 45 shall apply to the following transfer. Okay, shall apply to the following transfer. First, I will show you the main content what we are reading. Okay, we are reading transfer concept. What is a transfer is a theory question. Now we are reading What is not a transfer? 47. What is not a transfer? Gift is not a transfer. But that gift should be given by whom? Individual or HF. See, if you understand 47.3 properly, so many things in capital gains you will understand properly. If you do not concentrate here, so many concepts you don't understand. So please listen carefully. Okay. With effect from 1/4/25, applicable for you. Let us understand the concept. Nothing contained in section 45 shall apply to following transfer. Any transfer of capital asset by an individual or HEF under a gift or will or an irrevocable trust. So, any transfer made by an individual or HEF to any other person as a gift or will or irrevocable trust, it will not be treated as a transfer. Okay. Prior amendment, any transfer of capital asset by a person under gift or will or irrevocable trust is not a transfer. Now what they said, only individual HFA covered. And previously, companies also, if they give gift, same transfer is not getting attracted. Therefore, they are taking bad advantage. Therefore, amendment was made, removing all from that, only gift given by individual HFA covered. Okay. So, what is the provision? There is a transfer of capital asset made by individual HF to any other person, and it is a gift or will or irrevocable trust. It is not a transfer. Therefore, 45, capital gains will not get attracted. 48, a schedule, full value consideration, all these things will not come into picture. Next, very, very important interconnection came now. Section 49(1), 49(4), 56(2), other sources. Okay. See, 49, what it says. Listen to me. Listen to me. What this section wanted to convey is, whenever you give a gift, individual or HF makes any kind of capital asset a gift to some other person, it is not a transfer to the transferor. Therefore, no capital gain will be computed in the hands of the person transferring that capital asset. But problem is, what do you mean by gift? Gift means, what do you mean by gift? Gift means without taking any consideration, we will transfer. Okay, wow. For example, I will tell you like this. Example, the personal effect phone. Example, this is a gold biscuit. I gave this gold biscuit to you as a gift. Okay, wow. Imagine the transaction. I gave you as a gift. I did not take any money from you. Now, it's not a capital gain for me because there is no transfer. So, this is not a transfer. Adi very good. Now, you took this. Now, later point of view, you are transferring this gold biscuit to some other person. Okay. Whatever the money he pay you, you call it full value of consideration. Minus expenses of transfer, you will deduct net consideration, minus cost of acquisition, you will write. What is the cost of acquisition? That's the question. So, therefore, 49(1) came into picture. See, where capital asset became the property of the assessee under a gift or will, the cost of acquisition of the asset shall be deemed to be the cost for the previous owner. See, you took the asset. Actually, you did not pay anything. It's a gift to you. You transfer to some other person. At that time, you will calculate FVOC, full value consideration. From that, you will reduce transfer expenses. Net consideration will come. From that, you have to reduce the cost of acquisition. Actually, you paid any acquisition cost. Therefore, they said, don't do like that. Reduce some amount such that you will only get benefit. What to reduce? Cost to the previous owner. Okay. Next. Any improvement is that also you reduce. Where capital gain arises from transfer of a property, the value of which has been subjected to income tax under class 7, 78, 10, under subsection 12, section 56, cost of acquisition of such property shall be deemed to be the value which has been taken into account for the purposes of 7, 78, 10 respectively. Anyone in the session, do you know what is the meaning of this subsection 4 of 49? Frankly, you can tell. Let's not waste time. If you know, know. If you don't know, don't know. That's all. Reply. Everyone. Okay. No problem. See, if you know na, speed will be more. If you don't know, I will explain to some extent at least. If not everything, at least to some extent, I will explain. Okay, va? Listen. Listen. 7 is 7A deleted now. Not for syllabus. Income tax unit deleted. Both are. 10 is irrelevant for us. What they said, let us see. Hey, what we said just now, whenever any individual or HUF makes any kind of transfer of capital asset by way of a gift or will or inheritance, it shall not be treated as a transfer under section 47(3). Therefore, there is no capital gain computation in his hands. Therefore, the cost of acquisition is actually nil. But government wanted to provide a fiction. They created section 49(1). 49(1) what they said? If any person acquires any capital asset under 49(1) mode, cost of acquisition will be the cost of acquisition to the previous owner. You will be taking the cost of acquisition to the previous owner actually, even though you did not pay any consideration for the gift. But if the recipient of that particular gift is subjected to tax under section 56 subsection to class 10, then the cost of acquisition will be treated as a value considered for section 56 to 10. Okay. So what is the meaning? Let's understand. See, these all you can't understand. This is not the moment to learn. A regular classes la bare act analysis post-mortem of word to word we will do. But this is not the time now. So I will summarize everything for you and I will explain. Okay, va? See here. See here. There is a donor. There is a Dhoni. And the Dhoni illa. Dhoni, person receiving. There is a donor. There is a Dhoni. Transfer of capital asset gifted. Not a transfer under section 47(3). Therefore, no capital gains. No computation. No computation of capital gains. But Dhoni received acquired by gift 49(1) activated. Therefore, he acquires capital asset under 49(1) mode. Yes. For him, is there any tax? For him, there is no tax capital gain. For him, tax is there or not there? It depends. What depends? If it is received from a relative, not a taxable thing. If it is received from a relative, no tax. If it is not received from a relative, then you have to pay the tax on the gifted amount. Correct? When you pay tax on the gifted amount, I will take cost of acquisition as the gifted amount subjected to tax. Why I will consider the cost of acquisition to the previous owner? That's what he wanted to tell here. You did not understand what I said. Did you understand what I said? Income tax ni people are mugging up our Companies Act, income tax, summaries, all these concepts is spoiling the entire spirit of income tax, company law, all this. You should learn what is there in the sections clearly. Point is, gift is made by donor to donee. Donor, donee are relatives under section 56. Then no capital gain, no other sources taxability also, correct? Then you are not paying tax on transfer because it's not a transfer. You are not even paying tax under 56 to 10 because it's a gifted asset by a relative. Subsequently, if you sell na cost of acquisition, we don't know. Therefore, take the cost of acquisition of previous owner, they said. The understandable, fairly understandable. But the problem is, donor gifted to donee, they are not related. If not relatives, taxable. Gift taxable under IFOS. What is taxable? Fair market value of that gold will be taxable. That fair market value will be taken as a cost of acquisition, not the cost to previous owner. Because I'm paying tax on that. That's what he wanted to convey. Everybody answer, understood? Answer everyone, understood or not? So, see, this is the whole summary. Gifted capital asset is a immovable property taxed under section 56 subsection 2 class 10 subclass B. Okay, transferred capital asset, gifted asset is a immovable property. It is not a relative to relative, therefore taxed. 49(1) will not attract. Cost of acquisition will be the stamp duty value. Next, gifted a capital asset, immovable property. It is not taxed under 56 to 10B because it is between relatives. Therefore, 49(1) mode will get activated. Cost of acquisition is the cost of acquisition to the previous owner. It is a specified movable property. Okay, specified movable property means not being a personal effect. Adi specified means taxed under then 49(1) mode will not get attracted. Fair market value, just a gold I told same. Or else cost of acquisition to any other property, 49(1) mode, cost of acquisition is the cost of acquisition to the previous owner. Everyone, summary understood at least. If you don't understand section, everyone answer, understood? Next, concept dealt by 56 to 10. Okay, if the gift is a other sources we are reading now, if the gift is a sum of money, if the gift is a sum of money, see, I will sing the song only once. If you listen, you listen. If you don't listen, you won't listen. That's it. Where any person receives from person or persons during previous year any amount, sum of money exceeding rupees 50,000 without consideration as a gift, it is taxed under the head IFOS. Previous year of chargeability will be the previous year of receipt. Who said? Section 56, subsection 2, class 10, subclass A. So, where any person receives from any person or persons during the previous year without consideration any sum of money exceeding rupees 50,000, such a sum of money, the entire money will be, the aggregate sum of money will be taxable under the head IFOS in the previous year of receipt. Previous year of chargeability will be the previous year of receipt. Next, section 56, subsection 2, class 10, subclass B. Let us see. There is a gift of immovable property. Okay, without any consideration, let us see. Where any person receives from, where any person receives from person or persons during the previous year without a consideration any immovable property, the stamp duty of value of which exceeds rupees 50,000, the gift is received, it will be taxable under the head IFOS. Previous year of chargeability will be the previous year of receipt. Next, immovable property received worth inadequate consideration. Okay, worth is 1 crore. I received at 70 lakh. Difference is more than 50 lakhs or 50,000. That difference will become taxable now. Where any person receives from person or persons during the previous year any immovable property, the consideration is less than stamp duty value, then the difference between stamp duty value and consideration, if it is exceeding 50,000, okay, exceeding 50,000 or and not or sorry and the difference between stamp duty value and consideration exceeds 10% of consideration, then the difference between stamp duty value and consideration will be chargeable to tax under the head IFOS. Previous year of chargeability will be the previous year of receipt. Next, gift of any other specified movable property. Where any person receives from person or persons during the previous year any kind of movable property without a consideration, the fair market value of which exceeds rupees 50,000, the entire value will be taxable under the head IFOS. Previous year of chargeability will be the previous year of receipt. Inadequate consideration. Where any person receives from person or persons during the previous year any kind of movable property, the consideration which is less than fair market value, the difference between the fair market value and consideration exceeds rupees 50,000, then entire difference amount will be chargeable under the head IFOS. Previous year of chargeability will be the previous year of receipt. Everyone understood the concept clearly, yeah? 56 subsection to class 10. Completely we discussed in one chart in just 1 minute. IFOS completed. IFOS 2A, 2 parts. Number 1, a gift. Number 2, deemed dividend. Deemed dividend capital gains only we will read. So other sources gift, one chart we completed everything. Later expenses under section 57 will be there. 2 minutes discussion. Ante other sources over. Ide other sources. What is other sources? Show them. I'm talking to everyone. Clear? Okay. Next. Fair market value, fair market value, fair market value. What do you mean by fair market value? Ide fair market value. Just a procedure, yeah. Okay. Document is there in my Telegram group everywhere. You can see the document and read. Okay. Important things I'm going to cover. Not all concepts and wasting our time now. Main concepts, what are having potential to come to exam, those only we are going to cover. Okay. First of all, everyone, please tell me, are you all having a clarity up to here clearly? Yeah. Everyone. So my target period is 3 hours. Whatever is completed, I should complete because you also have IDT. Okay. So it's all around reaching 3 hours time. Okay. Now you start preparing your IDT. Again, I will record and I will upload the balance of capital gain 1.5 hours. I will record and keep. Please don't miss to visit the video and complete because you are not having only DT. Parallel, you are also having IDT with you. 3 hours completed. So the basics, everything was completed and capital gains, some parts are completed. Other sources, the main area is over now. Okay. Capital gains, 1000%. I will cover all important contents. I will record now and I will put. Okay. Tomorrow morning, first you start with capital gains recording. Listen to that 1.5 hour, 2 hours. Complete it. Later, I will come up with miscellaneous areas in your income tax. PGBP 100 adjustments I gave now. Fastly you see them. IFOS already uploaded. See them. PGBP 100 adjustments you see, or else you will waste time. That much time will not be there. So I will be doing 4-5 videos tomorrow. All are for 20 minutes, 10 minutes. At that time, once video is uploaded, you listen to that and complete. That's a better thing. So what are the things I will be uploading? One video will be on depreciation and additional depreciation. One video will be on section 10 AA. One video will be on presumptive tax regime. Presumptive taxation will be there, that one. One video will be on section 10D. Okay. One video will be on TCS and advanced tax. Okay, like this, all short videos, but only one big lengthy video will come that will be on capital gains. All the important concepts I will cover. Okay, because it is not even correct from my side and your side also to sit only on DT. At least to some extent, everyone, please tell me, did you get the confidence on all the basics of that income tax and the capital gains that were discussed till now and other sources, the main part that we have completed now? Everyone, do you have a clarity or not? Yeah. So tomorrow, capital gains first we will complete and then we will be going into some miscellaneous small issues. Okay, we will cover. I told anyway, 1 hour, this capital gains I will cover 1.5 hour. 1.5 hour, 3 areas, clubbing, set off and deduction. Those also I will complete. Just listen to them, solve the problems along with me. That's it. You are done with that. Clear? Okay. So all the very best. Prepare well. You will do your best. Don't think that short time is available whether I will do or not. Believe in yourself. Do proper hard work. After this video, please do not sleep. You have time. 2.5 hours you sit on GST and complete some part of GST as well. Are you all listening? Yeah. So thank you very much. Small issues, everything I will cover. My work is to record today. Overnight I will record 30 minutes la residential status, 30 minutes la clubbing, 30 minutes minimum. Within 30 minutes I will complete all the concepts and I will upload. At least 7 to 8 videos I will upload for you. Just listen to them and complete. You need not put any mind. Tomorrow concentrate on GST. Whenever video comes on DT, you listen to that and do it. You will complete it. Clear? So thank you very much. All the very best. Please do not neglect GST. Thank you. Thank you. Don't waste time in thanking me. I will be thanking you if you get an exemption. Please don't waste time in thanking. Get lost. Everyone, go away. Please study GST. Please study GST. Don't waste time in thanking me. Go, 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 go. Study GST. Yes, yes, I will share the PDF again. It is already there. Again, I will share. Bye, bye, bye. All the very best. Prepare GST properly.